Hi, I'm Rudy Martin, editor of Emerging Market Winners for Uncommon Wisdom Daily. Today, I want to talk about Cosan. It ranks as the world's largest sugarcane producer, the leading ethanol provider in Brazil, and a significant force in fuel distribution. In the past, the company was known for its ability to effectively acquire sugar operators and mills. But a few years ago, Cosan began to transform itself by making opportunistic moves into downstream fuel distribution and logistics. That kept the company in the ethanol game against its leading competitor, Petrobras. But these moves also raised the capital required to get to the next level. Last month, Cosan completed a $12 billion joint venture with Royal Dutch Shell, which improved its financial and operating flexibility. It also put Cosan on a truly global map in the energy business and increased its competitiveness. Now, there are a lot of positives to consider in the new Cosan Shell venture. First, it's the world's largest sugar processor with 60 million tons of capacity and a goal to increase that by another 50%. It's the largest ethanol producer in Brazil, and it's building new capacity to stay in the lead. It's the second largest distributor of fuel in Brazil, the world's fourth largest energy market. And there's more. Outside of the joint venture, Cosan holds a 70% net interest in Rumo Logistica, which operates Santo Port, the world's largest terminal for sugar. It runs a leading lubricant provider. It manages a growing retail food brand in Brazil with the resources to expand through partnerships and acquisitions. And it owns 180 farms in its portfolio through its land management partnership. With all this activity, it would be natural to expect this stock to soar. However, what's happened is that CCC shares have lagged, even as sugar prices have headed to new highs. I recently asked Marcelo Martins, Cosan's chief financial officer, in our Management Insights interview about this. His explanation was, quote, "Investors are still trying to understand the synergies created with our most recent transaction." To me, it's clear that the stock market has never seen an ag company make a successful transition into an alternative energy stock. Stocks such as Verosun Energy, Pacific Ethanol, and Infinity Bioenergy have been spectacular failures that have burned many early investors in the ethanol sector. Between the acquisitions, rapid growth, and new venture structure, there's enough confusion in Cosan's financials to scare away the inexperienced investors. So how different is the situation with Brazilian ethanol at Cosan? And has Cosan found a sweet spot in the sugarcane, ethanol, and distribution triangle? For the answers to these and more questions, check out my interview at the URL below. I'm looking forward to hearing your feedback on this. Until next time, happy trading.